Subhrakant, I want to pick on the sectors that don't seem to exude the kind of confidence that I hear from each one of you. And unfortunately, these are sectors that are job creators. These are sectors that are significant employment creators as well. We're talking about textiles, apparel, chemical fertilizers, toys, handicraft, and that's where the survey shows that the outlook is low or moderately low. How much of a concern is that going to be? Because the jobs crisis is a problem.
So this is certainly something, Shereen, that we have to keep an eye on, because as you correctly mentioned, these are sectors which have an employment intensity which is crucial, and I suspect that some of these are a little bit more export oriented, and therefore perhaps the slowdown in growth globally, as well as inflationary concerns, etc., that we talked about, is having an impact. But there could be other factors as well. For example, let me talk about metals, which is something I'm obviously more familiar with. And if you look at the outlook for the metals and metal product sector, which is ranking and towards the bottom of the table, I would suspect it has a lot to do with prices cooling, coming off as far as commodities are concerned, as opposed to volumes. I mean, volumes may or may not be affected, but certainly commodity prices have cooled off, and that is why the growth sentiment in terms of outlook for the next quarter or so is not as hot. And again, if I were to talk specifically about my company, when we talk about ferroalloys, our volumes are pretty much steady, maybe a touch higher, but the prices are certainly a little off is what we expect for next quarter, but nothing that we are overtly concerned about. So, it could simply be a little bit of a passing phase, but certainly something that one has to keep an eye on and see if it needs any hand-holding. And in fact, in this context, there was a extensive review of large exporters, of export promotion councils, and where chambers, etc., were there, and I had represented FICCI at that meeting, which was conducted by the Commerce Minister. And suffice it to say that I think the government is very aware of where things are at the moment, and very open to taking whatever corrective measures may be required to ensure that what we are seeing in terms of headwinds, the direction of that starts to change soon. And again, if you look at it from the point of view of where India stands from an export perspective, given our share of global trade, I would say that it's something that we certainly have scope to increase, and therefore, even if there are short-term challenges, the long-term growth story remains intact, and our ability to garner a higher share of global trade and therefore move towards the target of $2 trillion exports by 2030 is not something. I mean, it's never going to be a straight line, but it's not something that I am concerned about. One has to, of course, maneuver through the short-term challenges.
Yes, one will have to maneuver through the short-term challenges, and point well taken that, we are still a very small part as far as global trade is concerned, and hence the headroom for export growth is significant. In fact, I've just come away post a conversation with the global CEO of Alstom, and they're looking at upping their sourcing and exports out of India as far as the locomotive and railway business is concerned. But Anish, let me come back to you now and talk about the road ahead, and we're really talking about building out these ecosystems. Manish gave us an example of what's the aspiration as far as the capital goods space is concerned, the electronic space is concerned, with the various PLI schemes. And specifically for the auto sector, you're a beneficiary of one of the PLI schemes as well. What can we now expect in terms of the ecosystem impact as these start to build themselves out, especially in areas like EV, etc.?
So, Shereen, let me start first with where we are today. Even as we look at growth expectations, I do want to highlight the fact that capacity utilization in metals is 80%, in textiles, apparels, and technical textiles is 75%. So we are actually at a pretty good position, and that will only grow from where we are as other things fall in place. Specifically with regard to EV and PLI, we've seen a lot of support from the government, and that is something that is essential to bring EV into mainstream. And that is what we are driving for right now. As that happens, the need for subsidies will go down in future, but we are on a path where we've got to do some catch up with the rest of the world, and we are accelerating fairly heavily on that path to be able to deliver very strong EV products in India.
Okay. Mr. Singhania, you know, in terms of what more industry expects by way of intervention, we've just actually had the 50th meeting of the GST Council take place. There was some clarification there with respect to, you know, certain specific products, SUVs, MUVs, etc. But the road for rate rationalization looks unclear, and the expectation is that that isn't going to be on the anvil anytime soon. What's the expectation on that front, and how do you see that linking itself to the Make in India manufacturing story?
Very good question, Shereen. See, GST rates will always get tweaked along the way, and they will, you know, different people will have different views, and based on the ground realities, they will always get changed or tweaked, as I would say. But I think the bigger issue that you raised in terms of the road ahead and the manufacturing is that we need to be essentially a competitive economy. We need to be competitive in our cost of manufacture. That is what China and that is what many of the Asian countries did. We have the benefit that we have a fairly large domestic market. And so we don't have to go only on the export route. But at the end of the day, if we really want to grow our prowess, we have to be competitive in manufacturing, even on the export front. Now, there is a global opportunity, which is the resetting of the global supply chains. And here, I think India has the real opportunity in terms of becoming a much stronger part of the global supply chain due to a whole lot of geopolitical factors. So I think here, therefore, government policy, as well as the initiatives that industry takes in terms of improving quality, improving its own competitiveness, will become very important. And the whole lot has to come in. The cost of finance, the way we are developing our infrastructure, our labor policies, and of course, driven by domestic demand, all of this should help us move into this. And the last point is the whole way in which industry is adopting digitalization and looking at all the ESG side of the equation.
Yes, digitalization is, of course, part of the journey for every sector, every company at this point in time. But Manish, to pick up on the point that Mr. Singhania made about the opportunity that opens up because of this reorientation of global supply chains, and I think we're seeing the impact most visibly as far as the electronic sector is concerned, with many companies looking at alternatives to China, including the likes of Apple. I mean, there's the possibility of Apple actually being in talks with the Tatas to look at the Tatas picking up the Wistron facility in Karnataka to manufacture the iPhones. Do you believe that this is going to be one of the big growth drivers, the big engines for growth in the next few months?
Shereen, those are like big news, which inspire a lot of people within the industry and country at large. But, what I'm witnessing is a huge traction in the small and medium enterprises. And I believe the need of the hour for big manufacturers. And I believe there is a learning which we can take from the automotive model, which has evolved in last 4 to 5 decades, that how do we come together and aggregate the demand and ensure that backward integration takes place at the pace which is much more faster than what it has happened in the recent past. And the second aspect is that today electronics industry has started to play a major role because electronics cut across almost every vertical, whether it is medical, industrial, telecom, of course, consumer electronics, so and so forth. So therefore, coming together, aggregating the demand and ensuring the necessary steps are taken. So for example, we as a country, as an industry have to ensure that population of PCB, while we may have ambitions of letting the semiconductor manufacturing to happen in the country or the PCB laminate to happen in the country, but I think the logical first step is to ensure that population of PCB starts to happen in the country while it cuts across variety of different applications. So I think we have to take those tactical steps while we move forward to enable much more larger strategic benefits to happen in the time to come. And here the role of small and medium enterprises and enabling them with technology access is critical.
Oh, I completely agree with you that, you know, for us to really build out this Make in India story, it will have to happen on the strength of Indian MSMEs as well, and for them to be able to scale up to add to the competitiveness point that was being made by the panel. Final comments in a word each. Do you believe that 2023 could be the inflection point as far as the Make in India story is concerned? Subhrakant Panda, I'll start with you.
I believe it is an inflection point. You know, we are starting to see the benefits of an economy which is, you know, which conducted itself well, fiscally responsible, while being supportive. And you know, once you start gathering momentum, then you know, I think good things will come ahead. I decisively see this as a period where we are sort of resetting the trajectory on which India will grow through the course of this decade, and in fact even beyond.
Anish?
In a single word, yes. To expand on it a little more, I think we've got strong momentum. We've got infrastructure building now. We've got the government focusing on making business easier. Industries putting in more capacity. Consumer demand's in a fairly good place across the board. Yes, some weaknesses, but on balance, fairly good. So come back to the single word, yes.
Manish?
There's enough data available of economies which have moved from being emerging economies to developing economies. And if we look at ourselves from a potential $2,300 per capita income, once we cross that threshold, which potentially might be just about 3 to 4 years away, would be a huge inflection point to look at when it comes to consumption exponentially expanding. So I believe we are getting to that situation.
Getting to that equation. Mr. Singhania, the final word to you.
Thank you, Shereen. I think it's unequivocally yes, but with the caveat that we have to make it happen. We have to seize the moment as a country with all actors coming in place. And therefore 23, and I would dare say between 23 and 24, we can see significant change.
Well, we can see significant change. The stage is set. The question now is of getting the job done. Subhrakant Panda, Anish, Manish and Mr. Singhania, many thanks for joining us here on the CEO Sentimeter to take us through the highlights of the mood across corporate India when it comes to the Make in India story and, more importantly, what the road ahead looks like. We will take a quick break here on CNBC-TV18, but don't go anywhere. We're back in a moment with more. Stay tuned.